All right. Well, folks, thanks for joining us.
Yes. Mm-hmm.
You know, we're seeing a lot in the news about the craziness in the real estate market. It's actually a great time to buy today. You know, we've seen interest rates move up a little bit, but as a result, property values have started to level off, which is creating an opportunity for everybody that missed the opportunity to buy over the last 2 years. Sellers are rethinking their position in the marketplace. They're willing to participate in closing cost. That's been the biggest obstacle to home ownership. A lot of folks wanted to buy, but they need a little help to do that. So it's actually really a great time to buy. And we do have some tools that will help you with affordability over the next couple of years. And then for everybody that participates in today's program or that buys a house through this team, we'll offer a free refinance when the market improves. So you have the opportunity to buy today. And when rates improve, we'll give you a free refinance. And that way you can lower your payment without any cost to you. So we're going to talk a little bit about today why it's a great time to buy. So Deb, why don't you talk a little bit about what we're going to talk about tonight?
Yeah, well, tonight we're going to talk about some frequently asked questions that we get from buyers and potential buyers. The number one question is why? Why should you buy a home instead of renting? You probably get this advice all the time from your friends and your family. Buy a house, but you don't know why. Well, we're gonna show you. And who should buy? Who can help me? Who can help me is easy because the team is here tonight. We can help you with everything. And your goals are our goals, and Brent and Nick and I will set you on a path to home ownership. So that's extremely important for generational wealth. Teresa and I talk about that generational wealth all the time. We're kind of obsessed with it. What do I need to do first if I want to buy a home? Well, you're here and you're starting to get the information. Any more information that you need, we're going to provide it to you and get you educated and confident to go out and look at that new home. Now, here's the what ifs that people are afraid of. But we don't want you to be afraid of anything because all these things, credit scores, bankruptcy, foreclosure, student loans, they're all fixable. And Brent and Nick have special programs that address all these problems. When is the best time to buy a home? That is as soon as you can qualify. And even if it's a starter home or it's smaller than what you really want, just get in as soon as you can. Where should I buy a home? That question is kind of funny. Sometimes you can get special loan products depending on where you buy a home. How much home can I afford and how much down payment do I need? Nick and Brett's team work on the numbers. They tell me how much home you can afford. I have no clue. How much down payment do I need? Surprisingly, this is the myth. We're going to cover this and you'll be surprised at how much down payment you need.
You would. Debbie made a really important comment for everybody that's joining us today that's not a homeowner. Building wealth and building generational wealth starts with home ownership. The average American family's net worth, 67% of that is their home. And to have generational wealth, when you look at people that are passing as far as estate planning, the majority of the time, the wealth they're passing to their estate is the real estate they've owned. So your first step to building wealth, not only for your own sake, but generational wealth starts with real estate. So Deb, why should I buy instead of renting?
Well, again, because of what we said is generational wealth. I was just explaining this to my granddaughter the other day about leaving a legacy for your family. And most people's legacy is going to be the real estate that they own. Okay, you're going to own some stocks and bonds and all that, but mostly it's real estate because you can live in that home. Your children, grandchildren can live in that home. You can provide shelter for future generations. And you're building net worth rather than renting. Renting builds net worth for your landlord, not for you. So let's focus on you and get your generational wealth built.
Absolutely. Every time you make a rent payment, your landlord gets wealthy. Every time you make a mortgage payment, you're building your own net worth.
And the gap in family wealth between owners and renters is just getting bigger and bigger and bigger. And this is not going to stop. This is just going to get worse because rents are going sky high. The rents are increasing faster than the inflation rate, which is frightening when you think about it. So
Debbie's 100% right. That's going to continue to get worse as more renters into the marketplace. So rent inflation will outpace mortgage inflation. So it's important that we look at buying today. Nick, when we want to buy, what are some of the special challenges to home ownership?
Yes, well, the two biggest challenges to home ownership are credit and no savings or cash to close. Now, unfortunately, when you're looking at a low credit score or having challenges to credit, these things we're not taught in school. We're not taught in high school. A lot of times we're not taught this in college. So there's a lot of misconceptions regarding credit. So even with a low credit score, you can buy a home and that can be improved. Now, a low credit score is different than bad credit. There's no such thing as bad credit. Credit scores are a snapshot in time, and most people don't understand, like I said, how this works. Credit can be repaired. Scores can improve. This is a process. Sometimes it's an easy process where we could get scores up 30, 40, 50, 60 points in a few days, and sometimes it takes a little bit longer. But the idea is to know where you are and get on a plan to do things the right way. Now, credit scores are different. And what we mean by that is when you're looking at a Credit Karma or something like that, that's not a real credit score. There's 5, 6, 7 different versions to every single credit score. And credit scores can change with the different scoring models. For instance, what we pull might be different than what a car dealer will pull. And what a car dealer will pull might be different than what a credit card company might pull. So most credit score services are not mortgage scores. They are good for tracking trends and are not used when applying for a mortgage. There are different versions, like I said, of each score. And it's important to know what your mortgage score is because that is the one that's going to be accepted throughout the industry. Now, with the score breakdown, with the credit breakdown, 35% of your score is going to be your payment history. So the more on time you are with your payments, that is going to be a big part of it. Also, the amounts owed. Now, this is a very, very important. Somebody might think they have great credit because they've never been late on a bill, but they might have credit cards that are at their max or over their limit that they're still paying on time, and that could negatively affect your credit score. So the length of credit history, your credit mix, whether you got some installment loans like a car loan or personal loan with some credit cards and even some new credit, all this combines for your credit score. Now, with credit repair, this can be done. You want to work with an experienced lender who knows how to look at the credit scores. We do have simulators that can tell you exactly what you need to do to get the scores up as quickly as possible. If you worked with somebody or went and tried to get a car loan or a credit card and someone says, well, if you pay this off or that off, that might help. No, sometimes you can pay off a debt and it can actually hinder your credit. We know exactly what we can find out exactly what needs to be done to get your scores up with a minimal amount of money possible.
Debbie, do we have success stories about these?
Oh my gosh, we have dozens of them, but this is one of my favorite ones. I was at a local county fair with one of Nick's loan officers, Matt, and myself. And Matt had just left, and this fellow came up to me, and he just looked distraught. And he said, I need help. I need help. And I was thinking, oh my gosh, what's the matter? And he said, I'm afraid I'm never going to be able to own a home. I just filed for bankruptcy this week. And I was relieved that it was something that I could actually help him with. And he said that he wanted to provide shelter for his son and himself. And I asked him if he had had a job. And he said, yes, he was proud of the job and he was proud of his work. But the bankruptcy was killing him. So I told him to call Nick's loan officer, which he did. And he was on the phone with that guy for over an hour that night. And they worked together for 24 months in order to get his credit score up and to get him ready to buy a house. So he settled his house 24 months and 2 days after bankruptcy. But Matt, the loan officer, put him on a homeowner plan, and we got it done for him. We were so thrilled. But Brent, isn't there something new that he really wouldn't have had to wait 2 years now?
There is, Debbie. There's programs where you can actually help somebody that just declared bankruptcy or foreclosure one day afterwards with a very small down payment. There's some of the programs have changed, and the most important thing about the success story is that everybody that's on this phone call can become a homeowner. One of the most my most favorite adages I believe in is everybody can be a homeowner. It's time and motivation. If you're willing to put the time in and stay motivated, you can become a homeowner. And with that, Nick, how hard is the process?
The process is not hard, but okay, accurate information is the key. Details, details, details. You can't hide anything anymore. If you have a debt, or let's say an IRS debt somewhere that's not showing up on the credit, it will be found by the underwriter. Technology wins every single time. Everything gets verified. Your bank deposits get verified. Any type of income that you have, any jobs that you have, everything will get verified. So the best thing to do is be honest and upfront. There's very little, if anything, that we cannot overcome together if we know everything upfront. And how quickly can you respond? Achieving the settlement date depends on the client, which means that if we ask for something and you have it, get it to us right away. The longer we wait for documents, the longer the process becomes. And also, if you hear a lender or a loan officer tell you, "Oh, we'll just get an exception on that," you don't need to do that. We'll just get an exception. Run away.
Run away.
It is not you cannot make that call. Everybody has the same guidelines to follow if you're doing an FHA loan or a VA loan or a conventional loan. So there are no exceptions for one person. Now, as far as income goes, let's say you're a W-2 employee. We'll need your most recent 30 days of pay stubs, which means if you get paid every 2 weeks, we'll need 2 pay stubs, last 2 years of W-2s. If you're self-employed, complete copies of the your tax returns, business and personal. And if you don't have a year-to-date profit and loss, we can help you with that. And usually it doesn't have to be a audited or a CPA profit and loss. You can actually write that profit and loss. Also, complete copies of bank statements, all pages. That doesn't mean you take a screenshot from your iPhone of a piece of a bank statement and think that we can actually work on that. Full pages of bank statements, any other accounts, 401ks, thrift savings plans, IRAs. That doesn't mean we're going to use all that money to buy a house. It means that if you're showing reserves, it makes the case for approval much stronger. Now, so what are the types of loans out there? Now, FHA is probably the most popular. And a lot of, believe it or not, a lot of real estate agents think, oh, I don't want to accept an FHA loan. The process between an FHA loan and a conventional loan are pretty much the same. The one difference in an FHA, there's some health and safety guidelines that need to be followed as far as the condition of the property. But the benefits of the FHA loan are low down payment, 3.5% of the sales price. Credit can be better, and the debt to income ratios, are much higher. So you can qualify for more of a house normally with an FHA loan, because they do let you borrow a little bit more compared to what your income and your debts are. And families can help. You can get gift funds. You can get gift funds to help you with down payment. And also right now, the limits on FHA loans are very, very high. You can get almost $1 million in DC, and almost $650,000 in Baltimore. Now with USDA and veteran loans, these are two products where you can get 0% down. With veterans, you still can get closing costs help to help with the other parts of it, the transfer taxes, recordation, and escrows and title fees up to 4%. So you can still get seller help up to 4% to help pay for those. USDA loans, their guidelines are a little tighter. They are a little, there's income guidelines for that as well. You can't go over certain income. But the good thing about a USDA loan is that you do not have to go out and buy a farm. You do not have to have cattle or sheep or goats or llamas or whatever that it is on your property. There are sections that are USDA eligible near major metropolitan areas where you can get 100% financing.
Well, it's interesting. Debbie talked about how much money is really required to buy a home. And we think about it, sometimes we hear 20%, sometimes we hear 10, sometimes we have 3.5. Nick just gave you two programs which require 0 down payment. We actually have multiple programs that help people buy today with 0 down payment. Many of you that are renting today, you need first month's rent and security deposit. The rental market's so hot, sometimes you need first month's rent and 2 months rent security deposit. What we can tell you is that anybody renting today, that first month's rent and security deposit is enough to help you buy a home. And one of the things that you can use, and we can help you do that, is use what we call other people's money. There's a great book called Other People's Money, and it talks about how you can find money to better your investments. Now, it can come from a lot of different places. Nonprofits. We work with nonprofit groups. They can extend grants to help you become a homeowner. We work with employers that have employer assistant grant programs. We work with different city, county, or even state programs that provide down payment assistance. And we also work with city or county administrators. And the nice thing about this is a lot of times we're able to stack these together. We may put a state grant with a city grant with an employer grant and come up with $20,000, $30,000 to help you buy a home. In addition to that, we have our own program, which we call the FDM 100, which is a great product because it provides 100% financing for people looking to buy today. And it's relatively simple. The questions are, do you have fair credit? I don't need great credit. I need fair credit. I just need to have a credit score above 640. Do you have stable employment? Are you working? Do you have a employment history that would allow you to qualify for FHE loan? Do you want to buy a house today? And then because this is an affordable housing program, you just have to make, as a family, below 168,000 in the Baltimore area or in the DC area under 206,000. So a lot of people are going to qualify for this program. And as I shared with you, it really is 100% financing. Now with the market shift, you can get seller help. We can actually put you into a home for less than it would take to rent. With 100% financing and some seller help, you may be able to get into a home for less than it costs to do a first month's rent and security deposit. So how does that work? So the let's just say a $300,000 purchase price, the interest rate at 6%. If you're renting, the average rent in the DC marketplace is $2,500. Buying today at $350,000, and there are active listings under $350,000 in our area, and these can be purchased with no money down. And Debbie, what special benefit do we have for clients that work with us?
Well, our team offers cash back for buyers and sellers. So you can buy a house with no money down, get seller help to help with that part. And then after you settle, you'll get a check in the mail from us. It's a cash back program.
Wait a minute, I can buy a house with no money down and get money back?
Yes, it's like the trifecta.
It is a trifecta, man. I didn't hit the Powerball today, but I could have hit this.
I know,
right?
I know. It's
So-
our
so
little
we-
mini Powerball. We should call it the
Absolutely.
mini Powerball program.
It's our mini Mega Millions. So
Yeah,
when you look at this, so the example here at a $350,000 purchase price at this interest rate between taxes, insurance, and the principal and interest payment, your total payment is $2,061 compared to rent of $2,500. In addition to that, as a homeowner, you get to write off the interest in property taxes paid. So your net payment after taxes is $1,885. I'm a banker, so I'm not really good in math, but I think that's actually cheaper than renting today. Even if interest rates move up in this product, it would still be more affordable than renting today. And Debbie made a really important comment that rent inflation is moving up much faster than mortgage payment inflation. So that's just an example of how you can do that today. So this is an example of buying a home for less than renting, no money down, possibly no closing costs with seller help. And what again, Debbie, you get?
Cash back.
Cash back. It's
Cash
the
back.
mega
Brad,
millions for homeowners. Yes.
That's
Brad,
right.
I also want to add, when you actually have or own a house, you do get additional tax breaks. So
Correct.
you want to talk to your CPA, you might be able to file less and have less withholdings in your W-2 income, and actually give yourself a little bit of a raise as well monthly, and still
Plus, a
not
lot
have
of
to
people
work.
have home offices now.
Yeah.
Exactly.
So Nick, how hard's the process?
Well, it's not hard. It's not hard if you have the right people around you. You want to work with an experienced lender and realtor. You want to be able to create an attainable home ownership plan together. So you want to set goals, and you want to be able to reach them as quickly as possible. You always want to get pre-approved first before you go out to look for a home. You need to be committed to the process. This is a partnership. There is a lot of time, effort that goes up front to make sure that you are qualified for a home, and you need to be as committed to home ownership as we are of getting you there. Details matter. Be very accurate, as accurate as you can with your information, from the time you fill out your application to the documents that you send us. If you think that there's anything else that we need to know, let us know. We'll work through it together. Communication is key. All this actually comes together. The docs, any issues, let us know. Respond as quickly as you can. We can only work as fast as you can. Have your loan application documentation ready. Have your W-2s, your pay stubs, your bank statements. Have all that ready as soon as you can. If you're self-employed, have your tax returns ready. If you're on a fixed income, Social Security, disability, pension, have your awards letters and your bank statements together. And we are available when you need us. We don't work banker's hours. And everybody can tell you, if you need us, 7 o'clock in the morning or 11 o'clock at night, we will be available for you.
Absolutely. So Nick, when's the best time to buy a home?
As soon as you can.
Absolutely.
I mean, there's
Soon as
nothing
you
more.
can.
Yeah, there's nothing more that you can say about that. Actually, the difference in actually net worth, is over 50 is double from a homeowner to a renter. We went over that already, and it is extremely your equity, even if the market goes up and down and property values go up and down a little bit, your home equity will go up faster than any type of 401k or any type of investment that you can have. It's your biggest cash cow.
Bitcoin, it's better than the 401k, it's better than the stock market, especially when you consider you have to pay to live somewhere.
Yes.
Real estate is the foundation. I work with thousands of financial advisors. Real estate is the first foundation to building your financial future, because you have to pay to live somewhere. And Nick said you get tax benefit from it, and it's a better return than Bitcoin or Facebook. Well, especially now because Meta stock is getting crushed. But because you have to pay to live somewhere, this is your first step to financial freedom.
And one more thing to add. Let's say this is your first house, and this might not be your first house. And let's say 4 or 5 years from now, things change. You want to get something else. You can sell this. You have the equity to put down on another house. You could rent the current house out that you have and be one of those renters and get rich off somebody else. Okay. And go buy another house. Owning a home opens up doors you don't have when you're renting.
And what's exciting, folks, for a lot of people joining us on tonight's call, right? Keep in mind, this isn't your first house. This is your beginning house. This is your first house, not your only house. So you have an opportunity to start building your future. And I did this. I was fortunate enough to have parents in real estate. I bought my first house and I was able to keep them and get roommates and buy another ones. And you can do the same thing. And this gives you a chance to start building your financial future. Now, we do have a program. It's a new way to own a home in 2022. So we developed this program to help people that aren't quite mortgage ready. Right? You're just there, but you can't get approved with an FHA loan or VA loan or USDA loan, we created a new solution, which is a lease to own program that will allow people to actually enter into the home buying process, create equitable title into this, and actually not, even when they don't qualify for a traditional mortgage, we put this program to help you do this. So it's a combination where we're looking at renting through a leasehold to ownership, and it's a new approach, and we've rolled it out for this team. So it's something that's unique to us, but it creates opportunities for everybody that we're just outside the gap of qualifying. So how do we do this? If you're ready today and you don't think you don't have the cash to buy a home, or if you were turned down by anybody else for a mortgage, this is a chance to do this. People that really participate in this program are first-time home buyers, self-employed buyers. Self-employed buyers got really, really hurt by COVID because they were forced to close their businesses, where Costco and Target and Walmart and Amazon had great years. A lot of your small employers, self-employed buyers, were really hurt by that. If you are a 1099 or a gig worker, right? This is a new phenomenon. I'm an Uber driver. I'm a Lyft driver. I'm doing Uber Eats. I'm doing something different. I'm working in the gig economy where I'm a 1099 contractor for a tech company. That now doesn't fit in your traditional FHA, VA, or USDA box, but this program can work with that. If you're relocated, you have a new job. If you have a student loan issue, student loans are a big issue qualifying at times for an FHA loan or a conventional loan. We have a solution to help you do that. Recent college graduates, if you're an I-10 or DACA borrower, if you are an undocumented citizen, or if you're a DACA participant, this is a solution for you as well, because you're not going to qualify under I-10 or DACA for a normal FHA loan or USDA loan. Or if you have credit issues preventing mortgage approval, we can work with clients in this program down to a 580 credit score. And once again, as Nick said, the idea is to get into the process, start the process, own a home, and then as things improve, your credit improves or your employment situation improves, we can then refinance you to lower your rate. So how does this work? Right now, we do a 580 credit score. You don't need seasoned W-2 income. Now, this is important. FHA, you need a 2-year history to do this. Now, I have somebody, if they got a job in January, we can count that. If they got a second job in January, we can count that income. Overtime and bonus income, we don't need a 2-year history. So with this program, we can actually qualify you for more money because we can count income that traditionally is not counted with an FHA loan. Self-employed, if you've been self-employed for 1 year, we can help you on that. If your tax returns do not represent your actual income, we can use a cash flow component to help you with this. Deferred student loans, FHA loans, and other loan programs require you to count a minimum payment of those. As long as your student loans are deferred under this program, we won't count them against you. Cash to close, we can be flexible in how you're going to get the cash to close. I shared with you, I-10 buyers are a great opportunity here. And to Debbie's point earlier, where you used to have to wait several years after bankruptcy, if you declare bankruptcy, one day after it's discharged, I can do a loan for you. If you had a previous foreclosure, one day after the foreclosure is completed, we can do a loan for you. So this program is designed to help people that were pushed out of the process, give them an opportunity to do that, and we can do it for as little as 3.5% down in the process. So what are you going to do? We're actually going to work this with a lease to own program. You're going to build an equity during the lease. You're going to lock in your interest rate. If interest rates are going up while you're in this lease to own program, the interest rate is locked in, the purchase price is locked in, so you know what you're paying for the property you convert out of the lease to home ownership. We also build support for you to help you. We put a coaching tool in place. We provide a home care program to help you with the maintenance of your property. And this also allows you to make the right buying decision with confidence. So it's a new approach to do that. So if you were turned down by a loan before, you're not sure, you can reach out to Debbie and her team or Nick, and we can help you with that process. So Debbie, how would they reach out to us?
Just give us a call. Now, we went through everything pretty fast because we know your time is valuable. So we're sure you have questions. So reach out to me and we can set up a time where we can go into your personal questions and more detail about the home owning process and design a home ownership plan for you. Nick can do that and I can do that. We work as a team. we look at your situation and we find the best outcome for you and get you started on that path to generational wealth and freedom and the freedom of home ownership.
And, to that point, it's a great time. And thanks everybody for joining. This is the first step. Be confident in that process. Everybody that joined us today can become a homeowner. That's something that we know with 100% certainty, is that everybody that joined us can be a homeowner. And you just have to work together with Debbie and the team that we put together to help you do that. And don't let the media scare you. It's a great time
Yes.
to buy a house. Interest rates have gone up a little bit. I can tell you, just because I'm old and I've done this a long time, we do expect interest rates to trend back down over the next year or two. But what's going to happen if you say, okay, I'm going to wait till interest rates drop, when interest rates drop, property values will start going up again. So what you want to do is take advantage of property values leveling off right now with the normalization of the real estate market, and sellers now having to rethink where they were 2 years ago. 2 years ago, it was a brutal seller's market. You weren't getting any benefits. Sellers didn't have to do that. Now today they do, which creates an opportunity for you. How long does that window of opportunity remain open? Hard to say. So you actually want to look at moving sooner rather than later, even though interest rates have gone up. The other part Debbie talked about, as interest rates go up, right, rent is going up. So if you look to buy today, if you're comfortable with your rent payment today, when your lease expires in 23, that rent payment is going to go up. If you buy a home today, then you now make sure you have an affordable payment over the next couple of years. And as I said, if you work with us, when the rates improve, you come back to Nick and we'll give you a free refinance and you can lower the payment without any expense to you. That's something we're doing together as part of this team. And don't forget, you can buy a house with no money down and get
Cash back.
cash
Cash
back.
back.
You don't get that from anywhere else, folks. So thank you for joining us tonight. If you have any questions, you reach out to Debbie. And if there's any questions on the chat box, I don't see any.
Oh, Brett, let me quick mention something about opportunity cost if you wait. The
Yes.
opportunity cost of renting for 2 years at $2,400, $2,500 a month are enormous. It's like, I think $56,000. I know it's over 50. I worked with a client the other day. Their opportunity cost, because they were renting at $3,000 a month, which is getting more and more common. It was $72,000 a year for a 2-year lease. It's
Okay.
just
Why would you do
amazing.
that? That's $72,000 in your landlord pocket. The return of rent is always zero. If I'm gonna take
Right.
that 72,000, my job is to take that out of my landlord's pocket and put it in my
That's
pocket.
right. That's our goal. That's our
Right.
goal. But be the landlord.
Be the landlord. So, well, thank you, everybody. Thank you for joining us. And if you have any questions, reach out to Debbie. And if you have more questions, you want to join us next month, just check us out on Facebook or wherever and join us again. Thank you again. Have a great night and take that next step, become a homeowner. There's no better time to do it than today.
That's right. Give us a call.